I'm going to the city and I'm gonna do a city show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone exciting, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward at what might happen in the next week. And hopefully, lots of ideas, good opportunities for you throughout the show. This was a week of a lot of background news. Didn't mean that much to the stock market, however, just really a small down week coming from declining days on Tuesday and Friday. The stock market coming down, well, if you follow our short-term views, it's the only one we got right. We're going to take accountability at the end of the show in our short-term view for next week and take a look at what we missed. Currency markets got a lot of action this week. It was the UK Prime Minister, Theresa May, that talked about hard dates for the Brexit and some pretty hardline discussion coming out of Germany regarding that and other European countries. That sent the British pound into a tailspin. It was kind of a domino effect. We were expecting the yen to have a break also. The yen went down weak, but the British pound broke important supports. All of that got the dollar stimulated for a big move on the up week for the dollar, and that spilled over, of course, inversely into the precious metals. Precious metals had a very negative week. Just some panicky slides in there to the downside. In fact, all 5 days we've seen big declines in gold and silver. In fact, gold down some $75 for the week at one point, and silver down a huge $2. I mean, these are some massive declines there in the precious metals, and I'll show you some of those precious metals stocks, the miners, when we get into the worst of the week, which may be setting up some decent trading opportunities. So you're going to want to see that. Bond market, well, I woke up this morning to some alerts pounding in my ear on the phone as they broke key supports also. And we're going to say, as all this talk about interest rates going up, and in Europe, some big moves on the upside in interest rates. Also, Germany's interest rates moving back up towards that zero number. The bond market, we're going to call it a breakdown. Bond bull market, over. We really think that bull market is dead. And we were looking for another sizable rally, record lows in interest rates going forward. Now, we still think the bond market could have some rallying, but we think that what's happened now in the bond market is big trouble, and that means higher interest rates. The bond market does get ahead of the Fed when they see something coming, and there's a lot of liquidation going on there. Of course, the bond market throughout the world, some $100 trillion in those bond markets. So when the bond markets get roiled and they go on the downside, it's deflationary. People see their money evaporate because they have so much in $100 trillion in bonds. The money goes quick, and that is deflationary action. Oil didn't really get that message though this week. Well, maybe until Friday, when it finally started to roll over after what's been a big move on the upside. What's helped oil? Well, the OPEC news that they're going to try to freeze production. Still have to deal with Iran, Libya, not really getting production levels in there that they cannot surpass. And whether or not Russia's going to come on board with them, you got to think that they probably will, since Russia and the United States are having a lot of difficulties fact, broke off discussions based on what's going on in Syria. So with Russia and the United States not talking and that heating up, this OPEC discussion, and then Hurricane Matthew coming in, that really was a boost for oil prices, and they started to give it up. This scenario that I see playing out is a movie that I have seen before. Don't forget, I've been around for some 42 years as a trader, and I've seen like 9 bear markets, and what would that be, 10 bull markets? Started in 1973. That was actually in the middle of a pretty bad bear market, and then officially traded starting in 74. That bear market didn't end until 75. Yeah, don't tell me how old I am. So this movie that we're seeing a replay of is that the commodities are getting weak at the same time that the bonds are getting weak, and when there's a threat to asset prices falling, then it eventually gets into the stock market. So we don't know that we're quite there yet, but think about what's going on. If you want to talk about the chapters in the script that we're seeing here, the earnings are not supportive to stocks. Not that they're exceptionally high priced, but they are high priced, and also the fact that revenues have been coming off for years while earnings have basically held up shows you that there's been a lot of financial engineering going on. Yeah, they've been borrowing money at these low prices to push their stock prices up, buy their stocks, and that has helped earnings be engineered to be positive. So the earnings are not very supportive to stocks right now. The Fed is no longer going to be supportive to stocks, and there's all kinds of talk about even in Europe getting ready to taper their QE because they realize it's not working. Japan, they realize it's not working, despite the fact the yen is falling now. There's going to be a big rally in the yen coming into the next year. So, all of those scenarios that are supportive for the stock market are gone. And what about the election? When this election's over, you either have President Hillary Clinton or you have President Donald Trump. Which one of those are you going to celebrate? Well, you know how I feel about it. Neither. And I don't think the market's going to celebrate either of those either. Well, maybe for a couple days they would celebrate relief of not getting Donald Trump. So the supports for the stock market are really kind of not there. And here we are, basically up near all-time highs. So no bear market in the last 8 years. Well, we had a little mini bear back in 2011 where it fell 21%, but you can measure it in, like 6 years. And that is a long, long period of time. What do I make the risk rewards? Well, maybe you could get to a new all-time high by a couple, 3% on the upside. What is that, like 4 or 5% from where we are right now? Or maybe you can have a bear market and fall 30, 35%. I make the risk rewards 5, 6 to 1 to the downside. Doesn't sound like a time to be fully invested to me. Let's take a look at what happened this week as we look at our 60-minute chart of the S&P 500. And you can see in here that we had a lot going on as it was a choppy week in there. We had Monday come and stocks fell. This decline in stocks came overnight right over here and then got a rally as it so often does late in the day. Deutsche Bank, they talked about a rights issue and U.S., Russia, well, they suspended talks, you could see right here, and the relations are very stressed over Syria. Oil again up on that news, and U.S. stocks, well, they were weaker on the day. Come Tuesday, well, markets are up early, but the U.S. market certainly didn't end that way. The yen, the British pound, they get hit very hard. The dollar up. Gold is down $40 on that day. Big downside day. And Lacker talks about interest rates, and he says raise now. They should be at 1.5%, 1.5% ahead of inflation ticking up. So that got some selling coming in right in here. And, the miners getting hit didn't help on all of this oil decline. So rally and the gold decline. So take a look here at this rally day that occurred on Wednesday. Oil was up. U.S. fears again in the news about this U.S.-Russia breaking down of talk. Oil inventories really set it off because they were down again. It was the fifth time in a row. ISM was strong, and that sent the bonds down. So the stock market got a good rally, but then late in the day turned down. It was really a mixed day because you get this ISM news that hurt the bond market, but oil is up big and that's supporting it. And a lot of this background news is, well, really mixed. Comes the Thursday day, it was a down day overnight. The world markets were kind of mixed, but the miners weighed on stocks and the metals were down sharply again. Twitter down big as the buyers disappear. I'll show you that chart pretty soon. And jobless claims, however, near their lowest in decades. So we're getting really mixed jobs data out here. Oil, another big upside move, and that helps the market move up here. Early sell-off doesn't hold and they rebound again, just like we see here on Friday. The buyers continually come in and the market doesn't get any kind of significant breakdown at all. Essentially, not yet. Question is, will it have to rally first and fail before it can actually fail? That might be the case. Friday, the pound breaks down in a big way. Payrolls were a small miss at 156K, U3 at 5%, U6 at 9.7%, and stocks break down with oil as it finally gets a sell-off, but then gets a nice bounce again, as seems to always happen. Oil was down over $1, closed down about 67 cents, and the stock market has got about an hour to go as we do the show. Our calendar for the week, you can see right here, there's nothing really at all on Monday and Tuesday, and Wednesday the big event will be the release of the FOMC minutes. I expect that we're not going to get a lot out of that because they probably didn't want anything in the minutes that would stir things up pre-election, right? So, but we'll see, and that's always a big market mover. As far as earnings go, not much right now because, Alcoa starts earnings season, as you can see right there on Tuesday before the opening. And then, as always, we start to get the financials out first, where you have four of them, Citigroup, JP Morgan, PNC Bank, and Wells Fargo coming out just at the end of the week. So we get just the beginning of earnings season starting in the next week. That's it for the opening segment. I'll be right back with the best and the worst of the week. Best of the week. After quite a few months of struggle, this week it was the retail stocks that took off. Biggest mover by far was GPS, that is Gap Stores, GAP Incorporated. And we saw a 20% move in there. Crazy on better same-store sales. It's been a long time since that company has reported something as strong as this, and investors got caught by surprise, actually. Biggest up day in 4 years on that news. Take a look here as we look at this chart in Gap Stores, and you can see really a big up week. For those of you that are my students in cycle analysis, note this bullishly configured cycle right over here. We call this a base after this big declining period that we had in here, and note that the up week comes just about right on time based on the new advancing phase right there. So bullish cycle, you can see that right in here where it closes well above where it began, and then turns turns up, so you have that channel that's forming in here. That means you buy dips in Gap stores on a very, very good looking chart. Take a look at Nordstrom, JWN, and this stock pretty similar, right? It's building a base in there. We would look for some kind of a pullback right in here, a minor one, and then turning up again. So these retail stocks are really starting to look better to us. Of course, it's coming to Christmas time. So this is the beginning of the Christmas rally going on. So that's Nordstrom, JWN. Take a look at Dillard's, and you could see the base built in here also. Not quite as solid as it almost did get to that last low, but turning up right on time, and our cycle analysis is proving out to be beautiful in here as it does turn up right there in that bullish phase. Also, Decker's, DEK, we mentioned this one in the last week as we thought this was getting ready to turn up, and here we are getting into this positive phase. Also, you can see we have our cycle projection in there drawn to move up again. So those look pretty good. Also in the retails, Kohl's was up. They were up about 5%. I think you buy the dip around 44. Bed Bath & Beyond, they were up about 5%, and I think you buy the dip in there, next one we get, at around the area of around 43. So I would expect that between now and the next couple of months, outside of a stock market debacle, I would think that you're going to see a better performance out of these retail stocks. Let's take a look at Netflix, Nflx. This one up 7% on the week, big gainer for Netflix, and this was all about rumors actually. Who could possibly want Netflix? I mean, the rumor is that it's Disney, and that's no secret. I mean, it's been all over the tape. No, we've been in this rally, this positive phase right over here, and getting the rally, but it got right up to the resistance there at 107 and a fraction. It's now trading near 105 as it pulls back just a little bit. Take a look here at the daily chart. You could see it gets up here on those Disney rumors, and now is starting to reject. For those of you that are candlestick watchers, here you have a Harami cross right there, which is a signal that it's getting tired, and it tried to rally again and giving that shooting star right over there. It's not the end of the day, but it kind of looks that way. Yeah, we'd look for a pullback in here actually, down close to 100 again, as these rumors do subside about the potential of Netflix being taken over. So that's the chart on the left is the weekly chart. On the right is the daily. Let's switch over back to the weekly charts, and we'll look at LRCX. This is Lam Research. Look at this move in here. This one gets up to an all-time high as to over 100. The news in there is, well, the deal is not going to happen with them and KLA 10 cores. So that gets a big pop in here, and you could see right here that merger is over as the regs get in the way of the deal. You can see that note right there, and so it gets that upside gap on the news. This looks overdone to me, and wouldn't be surprised to see a bit of a pullback in there. The banks also are starting to show some good strength. Now, it's going to be pretty hard to get any kind of a real stock market pullback right now with the banks looking strong. Citigroup just absolutely blowing it out. A big move on the upside in here as it moves up for Citigroup 4 or 5% are big moves in there. And we're actually think it's a little bit early, but you could see the pattern that we have drawn in here in Citigroup as we expect that it gives some ground back, but overall fantastic pattern. What makes it a great pattern? Well, here's that basing cycle we told you about, right? After the big decline. And now another positively configured cycle. Pull back a little bit in here, but I think you buy any dip because I think it's going up again. So maybe that says the stock market's got a little bit more life in it before the downside corrective forces take over. over. Pretty strong look in there when you look at Citigroup. Goldman Sachs up about 4% on the week. I think you buy the next dip in there. And Bank of America was up about 3% on the week. And that is another intermediate positive looking pattern in there. So bullish stocks in the financial group are saying deflationary forces may not be strong enough to beat up that group compared to the potential for more profits as the yield curve turns more favorable for the banks. That's the best of the week, and I'll be right back with the worst. Worst of the week, as Harry Carey used to say, holy cow! The silvers and gold stocks, they got crushed. Of course, it was a bad week for precious metals. And these stocks, I mean, holy cow, they have really come down. In fact, some of them lost half their value or more just in the last couple of months. Yeah, there was a buying panic going on in them, and they are correcting, but they've done a huge amount of damage. Take a look at AG, and this one, this is First Majestic Silver, down 20% on the week. This is my biggest losing stock in all of my 320-something stocks that I look at. You can see this declining phase right over here. That's all of this, and now it's getting into the point where it should rally. We're looking for a low to form in the next 2 or 3 weeks. So we actually think that some of the worst stocks that we're going to show you now of this week are maybe some of the best opportunities going forward, at least for trading. So this stock, big downside week, 20%, and you can see that, probably worth a nibble in here. Take a look at AU, which is Anglo Gold, 15% down on the week. And all of these are moving down into time periods that we expected. So you see the declining phase in here, and in here, that's this. And in here, that's this, and in here, that's this, and each one of those was followed by a rally. You can see that. Even the weakest rally that you could see right over here was a good 40% plus move. So, I mean, we could easily see getting up to these resistance zones up there, a move from 13.5 to about 17. I mean, that's reasonable for just a bounce as soon as the pressure comes off of these precious metals. So Anglo, one, I think worth a nibble, and down 15% on the week. Gold Corp GG, another one with a big decline. This one down 14% on the week, another one that we believe is going to be turning up soon. Newmont Mining down 13%. PAAS, Pan America, down 12%. Gold Corp, GOLD, down, Rand Gold, GOLD, down 12%. And ABX, Barrick Gold, down about 11%. That gave you this big decline in GDX, and you could see the same exact pattern in there that we're talking about. Bottoming due to occur. There is the support zone right there. Here's the declining phase. Here's the rally phase. We'll put in the resistance zone here for our chart subscribers in the next week or so, and once we know where this bottom is, but we're expecting a bounce in here, and we would expect at least to get 30-35% of this decline back. So that would be 3 to 4 points, let's say, on the upside from around 22. So we're looking for a return on the upside in there. So that's bottoming that we think is going to be occurring pretty soon. So extraordinarily weak group in the precious metals this week, and also fell over into the mining stocks. In fact, the mining stocks, weighed on European stocks. Also, take a look at USSTLX. This one has our colored phasing in it, and what we believed is that this pattern right in here had bottomed and it turned up. This blue one here is the DBB, which are the metals, the base metals. So actually we think we're going to get another rally in here. This is a little early to turn over just after a 1.5 or 2 week rally. So we would expect it to get back into the resistance zone again before it rolls over. But this one down 7% on the week. I tell you, the analysts really do not like U.S. steel. So that one probably going to be under constant pressure. A little bit more rally we would see, maybe getting back up to 20 or 21, and then we think it rolls over. The big news, and everybody was watching this week, was Twitter. There was tons and tons of rumors out about all of the companies that were interested in it. Google, Disney, Salesforce, and they all, one at a time indicated that they're really not interested. Just that the business model is just not that exciting, and maybe they don't want to pay that kind of money to get into streaming. Maybe they already have, a good foothold into it also for some of those companies. So this stock, I got to tell you, it had a horrible week, down 15%, but it's not over. We're going to constantly get these rumors and stuff out in the wind about some company that is interested in it. And take a look here at Twitter as it had this big reversal. So I expect it to be a very choppy, though you can see that we believe it. Any rallies in here are going to continue to get sold. This big resistance up here at 26, it's going to take some serious buyer to get it above that level over there. And this big engulfing pattern is not a pretty pattern at all. It's going to be very hard, and I think you're just going to see a lot of trading between the 18 and 23, 24 area on this stock. So this was a big decline. And note in here this abandoned baby pattern. That's really a bad one underneath the minor support here. So everything in here says it's likely to try to get rallies, but we don't really think that they're going to be able to hold up. So that's a look at Twitter. TSLA, Tesla, is the next one we're going to look at. Take a look at the weekly pattern in here. Man, this one had a big up Monday because news came out over the weekend that their deliveries were super strong. So there were buyers on Monday, but then analysts have downgraded this stock. The pattern's in trouble. Truthfully is they have huge cash demands. We have been believing that this stock was going to continue down into December. You can see that right there. It came up right into our resistance zone, perfect, and a touch of the 34-week moving average, and then rolls over. It had gotten support right at the major 618. That's 61.8% of this distance right in here, and we believe it's going to go under there, maybe even get down over here to the 78.6%. Yeah, that's $168. Crazy to say that, right? But we have some risk in here over the next couple of months based on the pattern that we see in here. So maybe it's the cash demands that's going to do it. Last stock to look at in the worst of the week is Honeywell. Look at this head and shoulders top form. So we have the head and shoulders measurement in here. It's at about 101. As it rolls over, they really cut their outlook. We want to sell a bounce in here. There's a lot of volume coming in for this stock, and you've got this doji pattern that you see right in here. Now, here's the resistances in here, and we consider this the sell zone. So if you get a bounce in here between 108.5, 110 in that area, I think it's a short sale, and it will roll over for more declines. The company thinks that the outlook for them is not so good. The chart says the outlook for them is not so good. Honeywell, bad pattern, and we're going to sell it in an uptick. That is the worst of the week, and we'll be right back with a short-term view. We're going to get into the short-term view in just a moment. I want to just remind you once again, our new workshop is coming out. You're going to find this to be just great. Nothing like you have ever seen. Not your everyday how-to trader workshop. We're not going to tell you how to trade. We're not going to give you trading systems. What we're going to do is work on you being the best trader that you can be based on how you engage in the markets. This is really a workshop about self-discovery and being, well, the best trader that you can be. Take a look here as you see that our 5 essential building blocks to successful trading. This is about defining a healthy role for trading in your life, building emotional fitness so you can stop those emotional reactions that drive you to trade in an unhealthy way, and get balance as you match your style, method, and personality. follow our 6 key areas of discipline. That includes many aspects of how you engage in trading, and design your unique plan and winning formula so that you can engage in the market in the ways that can give you the best returns for your money and really be under the least amount of stress. So that's really what it's about, is an overlay of taking as much stress out of trading as possible so that you can be in as much of a good, clear thinking, intellectual place. So I'm telling you, you're going to love this. If you're interested, it will be available soon. We're just a week or two away. We're getting it up on the website. All you have to do is go to the askSlim website, to the bottom of the front page, click on the puzzle piece that says 5 essential building blocks. Put your email address in there. We're not going to share it with anybody. It's perfectly safe. And then when it's ready, we're going to let you know an announcement, and then you can go look at the information and decide if you want to sign up. But I think it's really going to be great and really be helpful to people of all levels of trading in the market. All right, finally, the short-term view of the coming week. Going to get into this now. Every single week we take an accountability of how we did in the last week. It's something that I have done for many years. I don't like to talk about things without then owning up to how I've done, and we've done great over these months. A lot of days, a lot of weeks in the area of 65 to 80%, even a 90% week. We talk a lot about reversion to the mean reversion. This was a mean reversion, if you ask me. For the first time in 5 years that we've been doing this on air, we had a 20% week. Man, I tell you, slapped me in the side of the head. This was a tough week. And for all of you out there that have written me some emails or made some comments, yeah, we know it's a tough week. And some people are saying, well, your cycles are not working. Truth is that the market cycles are always there. If there's anything that didn't work, it was my analysis. But here we are, stepping right back into it again, because we're always here for the next week, because we control our trading size and get ready to move forward when things don't go exactly as we expected. We're going to do better. That I know for sure. All right, so let's get into this. We're going to look at light crude, gold, the euro, the bond market, the stock market, and the only one we got right this week was the stock market. We blew it completely in light crude and gold, and the euro mostly wrong. The bond market completely wrong. Even though we warned about the potential of a breakdown, we didn't expect it to happen in the last week, and the stock market did what we expected, basically. And let's take a look now at the coming week. Here is light crude. So what we had expected was a down week. How does that look? Not so good, huh? Because it was up 4 out of 5 days, turning down in here on Friday. So we have been looking at these repeating cyclic rhythms in here that have big patterns and small patterns. So when we look at we call this one the short-term pattern. That's this cycle bracket right over here, and you could see how this one traded in here, right? And the previous one was an identical length right there, and each one of those is made up of these smaller parts that basically run 7 to 9 days. We've had a series of 6 days. That was 6th day right there, but now we're rallying through the 7th day. What does that mean to us? Well, we're right in here. You see that right there? Being driven up by this upward pressure. So if you go up for 7 days, it only leaves a day or two to come down, right? And then you rally again. So that's what we have, that arrow like this on our notes for the coming week. We expect maybe a down day coming on Monday, and the 23.6% is this short-term support. That's what we look for when there's no time left to fall. That's at about 48.90. Our guess is we can test that level, but then we think we're going to pop up over here close to 51, and then after that move down again. So I'm following these patterns right in here, which it continues to do, and then there would be a bigger sell-off after that. But that's an intermediate call right there. Oops, I drew a head and shoulders. guess I'm jumping ahead of myself. What do we look for in the next week? We look for a brief decline in here and then more on the upside right there in the oil market. So we would call that a small change on the week because we are looking for a down move early and then another up move right in here, but kind of getting trapped under some resistances over here. So we would say that, not a very big change on the week. If anything, maybe a small upward bias if we had to pick anything at all. So we'll take a look here at the next one, which is the gold market /GC. We are on a 2-year here, and we need to come back in to get this stuff all to line up. Let's get a little closer in here. So in the gold market, we said up week up to 1340 or so, and then more downside risk. So we thought it would go up and then down. You see an up day in here? Not at all. In fact, this was an incredibly poor, what we call left-hand translation. There is no way I could have sniffed that out. I had no idea about that whatsoever, and that we were going to have this massive 40-point down day right there in the gold market. So now where are we? Well, the lows are in this what we call nested area, which is out over here. See these nested lows right there? That's where all of these cycles come down. The GDX, the silver market, well, it's further out there. The big cycle, the gold, that all points to a period at the end of October. So what we're looking for is a still risky period. So the intermediate support, which is on the weekly patterns, we don't have the weekly chart up here, is at around 1238. We actually think that's going to hold right now around the 1238 level. The upside resistances, well, the minor 23 we believe is going to easily get tested. That's sitting at about let's get that exact price. No abouts. Let's call it 1268 right there. So that's only a 13-point bounce from where we are right now. And then this next area right over here is 1283. So we believe in there that we will get attempted rallies, but that the rallies will fail. So in other words, this downward pressure remains, and that any uptick in here is likely to fail and then down again. We're going to call this a small change week because we think it will try to get up and fail, and we think 1238 holds it. So that would be really the range we're looking for. On the outside 1280, on the downside 1238. That's where we think it gets held in there right now as it chops around within what we think is still negative momentum in here. For the euro currency /6E, well, this was a week where the dollar was strong because of collapsing currencies in the British pound and sharply declining yen. Now, that got pressure on the euro, and what really got pressure on the euro was a flash crash in the British pound that saw the British pound on Friday morning fall over 6% in about 6 minutes. It was craziness, and that gave the dollar a boost, but then the dollar started to pull back, and then the bottom was made in here. So we think we have this bottom in place right there, and you could see that bullish piercing pattern there on the daily. So we expect to get an up week in here. Test resistance between 112.53 and 112.83, and I think it will be an up week, but we don't think it's a runaway because this pattern in here we think still holds it. And just as you can see now, track these patterns right in here. You see that right in here, how they have been rallying. This we call a left-hand translation and was bearish. So we expect a rally in here and then rolling over again. It would have to get above this level to turn bullish, and I don't see that happening in this environment right now. So we're going to say that the corrective process in the intermediate phases is still in place, and therefore an up week, but only into this minor resistance, and then likely rolls over again. Now we'll take a look at the bond market /ZN. Is the first thing we're going to look at is the 10-year, and this is ugly. Now I'm not going to put up the intermediate patterns for you, but the intermediate low was made right over here in September. It rallied right into this short-term resistance zone and had these high waves. Those are those four tails that you see up there, and then had an engulfing, two engulfings right there, as you can see, and that engulfing set the tone, and what happened was complete collapse. We thought that these things would be in a range. We actually thought the 10-year would hold 130.24, which was some support right in this area over here, but not a chance. And now it broke under the key cycle low, even though it didn't close under there. That is a super negative message. Now, if you look at the pattern in here, what it looks like to us is that you have another week of downward momentum right in here. Similar to what we showed you in gold, like it could rally up, but then it's likely to fail again and test these levels in here. That's really what we would expect. We're going to look for a rally in the 10-year up to 130.15 to 130.23, the minor resistance right there, and then turn over and fail again. So we'll just call it a choppy week where rallies can't hold. I'm going to show you the 30-year also here because I want you to see that area of resistance again, this minor resistance. And the same thing in here. It breaks the low, but it doesn't close under the low. It's still bad. And then you have the potential for an attempted rally in here, and then move to the downside again. That attempted rally should fail in the 166.16 area to 167.07. That's where that resistance is. So we're going to look for an attempted rally that fails up in this area and then moves to the downside again. So the stock market is the one that we got right. Boy. So we'll take a look here at the S&P 500. Now, what we expected was that because there was a pattern that suggested that we would see an early rally fail and then some selling during the week, well, we basically got that. We thought it would test 2180, the S&P 500. It got up to 2176 or so, and then rolled over and failed. And then the look of the market in here is like it's using up the time to decline. So that says to us that because it basically did what we expected, but didn't break in a big way, and the downside decline, the window for that decline is closing, the time period, it says that we're going to get another attempted rally in the coming week, in this week. And our guess is that it doesn't last long, and then it rolls over and fails. So here's the chart that we're looking at and the pattern that we're looking at in here. This is the S&P 500. Let's get a little closer look right in here. So what we anticipated was that rallies would fail and then it would roll over and sell off towards the end of the week. That is this period right in here. So let's get a little closer there. So right now where we are is that we have likely moving into a short-term period of an attempted rally. Now we have another potential down day that could happen in here early in the week. We have this rhythm going on right in here. You see that? It's actually a continuation from right in here that you can see very clearly. So I'm going backwards, right? As we go backwards right there. All of those patterns really solidly hold up, as you can see right in here. It seems like I do that every week, don't I? And there you can see it here. And this is what we expected and then came down. So the rally phase starts, we'll call it Monday, Tuesday, and then likely gets up, but doesn't get much through this minor resistance area right over here. That upside target is 2160 to 2166. Now, it wouldn't be the worst thing if it tried 2170. again and then failed, I suppose that could happen. But the pattern that we're really looking at are these major patterns right in here. You see that? That says that if I'm right and this is going to get in the way, that a rally here happens and fails. And then this is a very risky period that goes out about 2 weeks from now. So we're going to call this week an attempted rally that fails, rolls over mid to late week, probably late week, probably fails that in that 2160 to 66 area, and then risks increase after that. So if we're right about that, then the VIX should probably be getting ready to have a big up week. We mentioned that last week. The VIX did nothing but erode in this last week because, well, nothing really happened as they chopped around and were slightly lower in the weekly stock market. But we can guess that if we're right about turning down in the next couple of weeks, or for the next couple of weeks, it being a high risk period for stocks, then I would guess that we're going to see a good upside pop in the VIX during that period. That takes us out to about October 20th, we'll call it, something like that, which is about 2 weeks from now. So we think that there, other than minor upside rally attempts, that we're really getting into a period where there's some risk. We're going to do better in this coming week, I promise you, because 20%, it doesn't get much worse. And we're going to survive weeks like this, that's for sure. Don't forget, check out our, go to our website and sign up so that you can get on our list for the coming workshop. Also, if you liked the charts that you're looking at, you can have all the charts that we do our cycle work on. That's 400 of them. That includes about 320 something stocks, plus a lot of ETFs and futures. So there's almost 400 symbols that we do our cycle work on. We do extensive work on 81 symbols. That'll cover all the trading you ever need on the best traded stocks and the best traded optionable stocks and ETFs and futures. So that we do a lot of work on the daily and weekly, as you see us do here. So you can have that on your TOS platform every single week. We update it, and even more often if necessary. And then they're live on your platform on TOS. You're not a TOS Thinkorswim member, you don't have an account there, then open one up, and you can get our charts a level 4 subscription. That's everything for the week. I hope there was something in there for you, and we want you to have a very, very safe weekend. And man, we sure hope that everybody out in that Florida area, North Carolina, out on the coast, is surviving that just huge hurricane. So we wish the best for all. Everybody have a great, safe weekend, because it's crazy out there. And we're wishing you great trading.